Welcome out to Tackle Trading's Halftime Report. It's Coach Tim Justice here, and Cody is with me. Mark's going to be joining us in a few minutes. We are going to have some fun here today. We're going to keep it lively. We're going to get down to business. But first of all, Cody, you're always in a good mood, and you don't give me the curmudgeon type of answer. How are you doing today, young man?
I'm doing absolutely fantastic. Actually, it's kind of interesting out here. This is the first thunderstorm I think I've seen in Hawaii, and it's like torrential downpour right now, to the point where the dogs last night were freaking out, coming to like jump in the bed with Kelsey and I.
Yeah, you're in the rain.
Quite intense. No, it's actually the dry season. That's why it's even crazier.
Yeah, I don't know Hawaiian seasonal rain as well as I should. Maybe I think they say the dry season from April to October. So usually later in the year is going to be the rainy season. I remember I was out there in March one year, and we were on the Big Island in Kona, and it was incredible rain we had. It was just downpour. So I know what those tropical rainstorms can feel like. It's pretty cool though, dude. I've got to get back out to Hawaii. I got to plan a trip with me and the kids.
Come on out.
Got to come out and do some hiking, come see Cody. We got a good team out there. We got a lot of students out in Hawaii, so I definitely would like to come out and do that.
Absolutely. And I mean, everybody's welcome. I know all the good spots.
Definitely. If you've never been to paradise, plan a trip. There's no doubt about it. S&P 500 red candle today, down 0.47%. One thing that we're going to do here today, Mark, and I was telling Cody in pre-production, is I want to go through every index before we go into individual stocks. So we're going to do it a little bit different than what I've done in the past. We're going to keep it more just top-down based and go one step at a time. A little hesitation up here at the top, Mark.
You're the captain. I just add the commentary where appropriate. Sure. I say what's on my mind.
Good. Yeah, no, that's good. That's why you're here. You're the color guy, right?
I guess. I'm the get on and run my mouth guy. How about that?
All right, got it. You're like Kornheiser on Monday Night Football.
Kornheiser was underrated on Monday. Tony Kornheiser is hilarious.
He's one of the greatest. I love him. Anyway, S&P up here at the top, Mark. Give me an opinion. What's going on with the market? Little red candle, just hesitation. What's your take?
My take is I'm selling a put so that this market will actually do something.
Explain.
You know what? We appreciate that, Mark. Please do that.
Because it's boring. Listen, I need action. I need something to happen. When a market's just drifting, none of the strategies I use are workable. I like buying things when they're on dips and then on reversals. I like buying clear breakouts. I like doing, all the things that I do. And so I'm selling a put because either I'll get the credit for that put or the market's going to do something. So, maybe we'll create some action.
Well, you do have I've done a lot of back testing, a lot of studies, very, very simple ones. You have a positive expectation to make profit over time, just selling puts on the market on any random day, Mark.
I know you do.
Any random day, just pick any random day, just sell a naked put, and you probably will make money.
And think about this. Any put you would have ever sold in the entire history of the S&P 500 turned into a positive, profitable situation as long as you didn't sell.
Mm-hmm.
You think about that. You have a strategy that is 100% over the course of the entire history of the markets, as long as you were willing to hold. Now, that doesn't mean you should just blindly do it. You should have a system. And, and I have a system that involves rolling down. So it's not like I'm just sporadically selling a put. I have a system that rolls down, then scales back in, and so forth. But selling puts is amazing if you don't have anything else to do with the margin, and you're only doing it with money that you can afford to take drawdowns on in the short term. So
yeah, I agree with all these things that we're talking about. And by the way, we're putting the podcast out today, and we're talking about the boomerang trade, which part of the boomerang trade is selling a naked put on something you're willing to take delivery on. And then if you have to, you can convert it into covered calls. We're going to be deep diving that on the podcast. Keep an eye out for that when it gets released here. Obviously here on the daily chart, we're at 29.34. I've got support down here around this 2,900 mark and resistance up just above the top here, 29.69. We hit an all-time high intraday on Friday, guys. Now here we are on a Tuesday, and we're on a pullback, and as a matter of fact, the intraday pullback at 0.59%. Cody, give me an intraday chart on the S&P, if you will. quick
You want an
peek.
hourly or 15 minutes?
15 minutes, fine. Yeah.
Well, we're just breaking we're actually having a nice technical breakdown off the 215-minute right now.
Yeah, it just broke right now.
Like if you put on
Wow.
like just literally breaking down out of the 200 moving average on the 15-minute chart. If you go to the SPY, you can see it more clearly. Sometimes moving averages on the minis are a little bit different because it's continuously traded, and you have continual moving averages on there too. I can tell because of all of that spotty gap action.
That's a good break right there.
It's having a breakdown on the S&P 500 right now as we speak.
Yeah, I'm looking at the heat map, and from an overall market perspective, it's weakness in tech right now, guys. Move on to the NASDAQ 100, if you will, here, Cody, because I'm seeing Google, Facebook, Microsoft, Adobe, many of the tech names that we're going to see on the NQ. It's breaking down here intraday as well. In fact, we're seeing a breakdown below 76.80, same kind of intraday pattern. Back on the daily chart, you're going to see a bigger, deeper red candle down 1.14%. Mark, could this be more than just a one-day retracement? Is this much needed? What's your overall reaction to a Tuesday? We're in the red here.
All right, here's the big question. Okay, so let's break out of technicals for a little bit. Most people think that the market's not right. Like market hitting all-time highs, market hitting these resistance levels. Most people are like, it just doesn't feel right. Just because we cut interest rates, which created a great short-term rally trading opportunity, we still have all of those big questions on, hey, the economy's not great. Should we really be hitting all-time highs when the economic data is not screaming great? And so it just doesn't feel quite right. Like it doesn't feel like that robust bullishness. So now does that mean I'm scared and think that the market is like dooms and all that? No, but when markets hit their all-time highs normally, it's like when you go back to 2017, you had this robust environment of economic growth around the world. You had the tax cuts. It felt right. And so when you hit new all-time highs, when you did breakouts, you had all of the sentiment and it felt right. The markets at all-time highs right now just don't feel right. It just doesn't feel like it's that great opportunity where it's going to take that next leg higher.
Yeah, but that also is what can create FOMO rallies when the market does break out and does start to run. A lot of institutions, they worry they're going to miss out on the run for the year, and so they start piling money in. That is not happening here today. I'm with you. It doesn't feel right, but it doesn't feel wrong either. It kind of feels interesting to me in mix because you've got an old pivot point right there at 70. What is that? 7,600. Cody, find that pivot from early in May. And then you also have the same late pivot in June. Could this just be the start of a little pullback? It needed a pullback, Mark, and we're currently in that uptrend in the V-shaped recovery. Isn't that the most likely argument here?
It is a really, really tough market because I can make all kinds of cases right now. It's cash flow strategies could have a really good summer. Let's just put it that way.
Yeah.
Because the market does have, all right, here's the bull case. So playing at home, which case do you buy more? Here's the bull case, that the market will stabilize on any pullback that's a little bit deeper. So it might pull back, another 3, 4%, 5%, but anything that is really dramatic, the market knows that the Fed has its back. The economic data, while not robust, is not terrible in the United States. It's just not great. There are, mixed is probably the best word. So any pullback of any depth should be bought or at least cash flowed in some way because the Fed has its back. It will continue to do things to stabilize the market. All right, and the bear case is, listen, you're flashing recessionary signals at all-time highs. That's freaking crazy. The trade war is unresolved. That thing could escalate at any given day. They're meeting at the G20, but, we've seen this song and dance before. That thing can escalate at any given day. So you have economic data around the world that is terrible, economic data in the United States that's mixed. The trade war can escalate at any given time. So you buy at the all-time highs, good luck to you. I mean, so those are the two cases right now. And people fall in one or two camps, or people are like, I don't have any idea. Needless to say, this can create a lot of back and forth price action over the next couple months, which can be great if you know what you're doing.
If you're a Delta trader, you're going to love it because it's going to create volatility and stock price action. If you're a Vega trader, you're going to love it because the volatility is going to pick up into earnings season, and there's all kinds of different ways that you can trade that. And if you're a Theta trader, you never really care as long as you know how to hedge and adjust your Delta and play it day by day. NQ is down the most out of all the major indexes. And I got to tell you, that's weakness out of some of the fangs. Google, Facebook, Microsoft. We'll look at individual stocks here in a minute, Cody. I want to do it a little bit different here today. Give me the RTY, if you would, and then we're going to do the Dow last, actually. RTY contract. This one, small caps. I give you a softball on the podcast, Mark. I'm going to ask this to Cody and see if he gives us the same answer. Cody, is it concerning that the Russell has lagged behind the overall market, and what's your read on that chart?
I was trying to think of a good joke. Nothing came to mind. Honestly, yes. And I, until the small caps, and we've said this multiple times over the past month or two, until these things really turn around and show me something really bullish, I have a hard time going completely bullish on the entire market. So is it concerning they're lagging? Absolutely, because the small caps are the U.S. economy here, not the global large Googles and Apples and global giants that we have to deal with. This is the small American economy that we see when this thing isn't doing well. I can't expect the market to run.
3 red candles, Mark. We're sitting on a quasi support zone. You've got a moving average cluster. You call this moving average soup. I'm just going to call it a mess. Can you make sense of that chart besides neutral? Is there anything outside of that?
No. Whenever you have a sideways trading market, the best thing to do is find support areas, find resistance areas, draw nice horizontal lines, and assume that until something big happens that you're going to trade within that range. Some people love range trading. Iron condor traders, a lot of naked call sellers, a lot of people that like buying at bottoms, selling at tops. Like some people just absolutely love range trading. And that has been, it's traded in a range for all intents and purposes in 2019.
They're your horizontal lines.
The market is picking up steam here to the downside. I'm seeing
now when that breaks out, I don't want to be on the other side of anything else.
Well, it did break out in April and it failed to run, at a one-day breakout. And then it broke down in May and it failed to run. At some level, you back that out to a weekly chart and you smooth it out. It's got to break and actually have some reason behind the break potentially.
Yeah, on neither time did you really have a catalyst. When it fell to the low side, it was a little bit of bad luck because you were in the trade war. Now, the one thing you know about the trade war is it creates this back and forth storyline. Good news, bad news. Well, you went a string of about 8-9 days with no good news in the trade war, which is a little bit of an anomaly. Usually one of the sides come in and give some propaganda. There's something that helps stabilize price in trade war. It just played out a little bit different. The good news came in a little bit later. There was a little bit of an 8-9 day cycle with no good news. But it still, in the end, played out the same way the trade war has since the beginning. Trade war is really simple. Don't trust what you see. Prolonged moves or big moves one way based on the trade war. Be very, very cautious in entering delta-based trades at the height of trade war hysteria. Either way.
I'm looking at news right now in the market. I don't see anything that's really grabbing it. Just kind of a technical intraday sell-off. Doesn't really.
Listen, when you break those major moving averages on intraday charts, this is what you call a technical sell-off, a little burst. I mean, you just lined up nicely. You're below the 50 hourly, you're below the 215, just a little burst down, but there's some room to run on the downside right now. Once again, you traders out there that are bullish, you need my 9 EMA, my girlfriend, to help you out on the daily chart.
Correct. Those EMAs are very helpful. And you talk a little bit about the continuous moving average data set. Based on what you know, and give us the high level overview. Why is that important to make sure that you have it the data a certain way?
Well, it's good to be a no. Now, listen, we are simple human beings. We are very simple human beings. We can only process a little bit at a time. Computers process everything simultaneously. And so like like on many trading charts, what you can do is you can put the data just to be reflective of what's in market hours.
Mm-hmm.
So the hours markets are open. And this is some really advanced stuff that you've probably never even heard before. But I came across this, and it came across this in my studies when I was trading oil futures and natural gas futures and studying those markets. And continuous moving data is reflective of like when the entire 24-hour cycle, which for the futures market during the course of the week is applicable. But many charts and your chart settings can be just geared towards, and this is what I advise, because once again, have limited cognitive abilities, each and every one of us. Make sure that they're set for just market hours to make sure that those moving averages, if you're using them, are reflective of just the moving averages that are calculated based on when the market itself is actually open.
Yeah, a little bit of a sell-off coming in here midday. I see Coach Gino popped in. Always good to see your name and hear your voice, Gino. I'll bring you in whenever you're ready.
What's up, guys?
What you read on the market right now, Gino? We're talking about the intraday breakdown.
Oh man, I've been seeing that the market's up in the middle. I gotta wait till the last hour, Tim, to get a read on everything. What's the big news we're waiting for this week?
G20 meetings later in the week, OPEC next week, stuff like that. Yeah. Give me the ARCA high-low here, Cody. While we got Gino, might as well talk about one of the indicators we use on the
Gino oscillator.
It did actually flash some bearish signals here, Gino, in the short term. Saw it dipping down, not quite holding in the red. It's now back up a little bit. What has to happen here for you to start calling this bearish?
Okay, let me dissect this one. And just so you know, I call this the Gino oscillator because I used to follow the McClellan oscillator, and it's a variation of it. Give credit to where credit's due. Mr. McClellan. Looking at that, it's still above, what is it, 80 right now?
Yes.
Yeah, that's still positive. That's still buy the dip until it gets below red, which is negative 50. So really, Tim, it was at 100, I think was the high today, almost 100. It's pulled back a little bit, but what that tells you is a lot of stocks, more stocks than the ones that were down, more stocks that were hitting new highs today. 100 more were making new highs and then backed off a little. So, I mean, that's still a pretty good number. Usually, Tim, what you get is you get a couple in the neutral zone between the green line and red line. Then we go bearish, kind of like, I'll give you an example, May 2nd. May 2nd. You see that? Go back to May 2nd there. That's what you're looking for, a turnaround in the market. May 2nd, right? You see, there you go. There, that guy right there. See him? Mm-hmm. That's when you get, okay, when it came off the highs, dropped right to neutral. It tried to poke his head back up. And then I don't go bearish on the market till I get two solid negative 50s or lower. And that's
we're not there yet. Obviously.
Yeah, so, right now, no worry. Still buying on the dip until I get other word, And by the way, Tim, I don't know if you guys caught the lounge this morning. A lot of sectors are up. We're a little bit weird on energy, but a lot of sectors are up. A lot of stocks and utilities, staples. We just posted the stock of the week, which was CL, just so you guys know, which was my pick on the option report, which is a staple, beautiful setup. But that's my take on my Gino oscillator there. That's just one of many, though. That's just one of many.
It's always good to have Gino popping in. Everybody here in the chat, just say hi, Gino. It's always good to know that you're in that lounge as well. If you're a pro member at Tackle Trading, make sure you're attending those lounges during the day so you can get a lot of the deeper dive analysis on individual companies and get your questions answered. Mark, that lounge is a very, very popular product that we have as a part of our pro membership.
Oh, absolutely. Absolutely.
Yep. All right, move on to the Dow Jones Industrial. Let's keep working through markets one step at a time. By the way, if you're watching us for the first time, as always, I'm going to ask you to subscribe and click the bell on our channel to make sure you get future show updates and alerts when we are coming through here. YM contract down 0.5%. Not much else to see here in terms of the technical analysis, guys. Large cap stocks that have Dow components and pay dividends. If you are looking for an area for a boomerang, Mark, maybe the Dow over the S&P. I'm not sure if you have a preference one way or the other. The S&P is more broad balanced.
Well, first of all, I never start a boomerang at the top of any market. It violates and I'll talk about this. I'm doing a special Mind of the Trader tomorrow night on how I approach the boomerang trade. In the commodities report this weekend, I started the first of a multiple part series. Now, the boomerang trade is my favorite trade right now. Like it is what I spend most of my time on right now. And rule number one is I never buy anything if I'm not willing to hold it forever at that price. And so by its nature, I don't institute boomerang trades at the top of a market. I never will, just not my way. So it would need to pull back a whole bunch more.
Just not your style. Yeah, I don't think that's where we're at up here at the top either, obviously. But the Dow, I do like the Dow a little bit more than some of the other indexes. I've got it ranked at the top. Now, if the market started running and got hot, technology could propel up, but you're seeing the volatility even just here today. The NASDAQ's down further on the pullback than the Dow is, or the S&P here at the top. We'll go through some individual companies here in just a minute. Move on to the dollar. Cody, I want your analysis on the dollar here. Obviously, we're going to start just with the technicals on what's going on now. What are you reading in the overall dollar index right here, Cody?
So the dollar is bearish. No doubt about that one. It came down. It hit 96 pretty exactly. And then now it looks like it's going to have a breakdown pullback. I'm expecting this thing to rise over the next day or two, just into that 96.50 range, and then possibly continue to the downside because that break of the 200-day moving average, you look at all other currencies, the euro, the British pound, the dollar is bearish against all of them. So,
start back in January, Cody. I want to do something real quick. I want to show the importance of pivot relationships. And I want you to put your mouse right on the candlesticks. And Mark, just kind of listen to the pivots as we go. So start there and then just trail it like you're drawing a line, okay? So then we put in a lower pivot or a pivot low.
So we're literally higher high, higher low. Not quite
Equal
a higher high, just equal high, higher or lower high. Higher high, higher low, higher high, higher low. Not quite equal. Higher high, higher low, equal, lower low, lower high, lower low.
Pivot relationships, Mark. There's many things that tells me right there is that the dollar is rolling over technically and fundamentally, but also dollar doesn't go straight up or down. It pivots. It'll pivot up, it'll pivot down. With one green candle down here, Mark, do you expect a bear retracement to develop?
It sure has the lookings of a bear retracement, doesn't it?
Yeah.
Yes, it does. I expect it to come right here-ish, and then I'm going to short it again. And it feels un-American to say that I'm going to short the dollar, but I trade the chart.
And the thing about it is if you are trading commodities and gold and this and that, you really need to understand where the dollar is, because if the dollar rallies, let's say if this bear retracement plays out and the dollar rallies, well, gold will probably sell off a little bit. So let's say you were looking for an opportunity to get into gold, like it seems like everybody else is. Listen, I'm so upset right now, Tim. Nobody ever bought any gold for the 3 or 4 months I was screaming it. But now everyone's like, oh, I got to go get in and I got to go buy it. And I'm like, where were you when it was back at 1280 when I was screaming buy more gold?
Sure.
I just don't feel bad for people who are, oh my gosh, I have to buy it right now because it might go to the moon. Go buy it back when it was cheap. Go back and when me and Matt were yelling for 5 months, buy gold. But now it's like, well, now's when they want to get in. That's just not how you're going to get rich, people. That is not how you're going to get rich. You got to find those great opportunities. You can always trade, and I'm not talking about trading. I'm talking about position holding, investing. You're not going to get rich investing, buying things during parabolic move ups. You're going to get rich investing when you find those value opportunities long before everyone else does. That is something we do for pro members at Tackle Trading. We screamed to pro members for months and months. Gold is a great opportunity. Gold is a great opportunity. Gold is a great opportunity. This type of move was available. So if you were missed out and like, oh, I need some gold, having the dollar do that bearish retracement where it rallies a little bit, sets up that bearish retracement, might be, you know, one of the better opportunities in the short term to try to get into gold if that plays out like it is. You need the dollar to rally a little bit if you're not already in gold. So gold will pull back.
That's right. What Mark's talking about here is somebody in the chat type in the words inverse relationship, because when the dollar goes up, commodities tend to historically come back down. Dollar is starting to rally here on the intraday, taking off a little bit. Cody, you going down to a short-term chart. What are you seeing here, bud?
I'm wishing that I had my personal account open right now so I could be day trading this. That's what I'm
yeah, Forex is good for day trading. Yeah,
that's a really strong. I mean, you break out of that. What is that? A 200 falling?
Yeah, 200 right there. I got 200. Yeah,
that's a really strong day trading signal. I mean, those type of moves. That's why moving averages is so powerful, because day traders and computers come in on those strong signals.
Oh, look at that.
Mm-hmm.
But I'm here with you guys, breaking down the market, not making money right now. So,
well, you could have had your order in, bud. You don't have to be watching it 24 hours a day. So there could do not put that on somebody else.
I'll trade it for you, Cody. Let me log into your account real quick.
Thanks,
give me your
Gino.
password over the internet here. Give me your password.
Just live and just tell everyone.
Yeah, just give me your password. We'll trade it for you, buddy. You stay.
Yeah.
Mark, you made a good point, Mark. So remember, we did a show, I don't know, 6 weeks ago where we were talking about covered calls, or not even that long ago, and we did it on Nugget. We did a covered call on Nugget, NUGT, and that is the gold miners. And wrong strategy for a move like this because we're capped our upside.
But so you made money.
Made money, max profit, all that matters. And I'll tell you, that's the big decision, Mark, is what's going through everybody's mind now is, okay, so we're up really good on gold. How do you know when to sell it? How do you know when, okay, I'm profitable on something?
Bring up gold. Let's talk about it. Bring up the daily chart on gold, if you would here, Cody, and get into these commodity analysis. It's a good question, Gino. It's the question I was having. I asked Mark and Matt earlier today when we were on the phone and we were talking. Guys, where do you take profits on an upside move like this? I mean, do you need to here? Because you can miss out on huge runs and huge trends. Mark, what's your overall philosophy in a situation like this?
I'm conservative. I either take profits or I institute cash flow strategies. And since with gold, instituting cash flow strategies, you can do amazing things with gold right now if you got in at an earlier level. Once again, like, this is commodities. Yes, can things trend? Can they go on forever? Yes. But you can also like maximize those runs, you know, and I know you're going to bring up the example of palladium and bring up the palladium chart, because things can run for a very long time.
Mm-hmm.
Find ways to do selling calls to maximize your situation, because right now volatility is a little spiked on gold. So you're going to get, like, regardless of your gold trading instrument, going to get reasonable premiums on the selling of gold. And what Tim's talking about is, like, you broke out of that 200-day moving average back in September of last year. So you had a nice breakout, really nice pattern, nice technical signal, and palladium started a nice trend. Now, one thing that you'll see in that chart on the start of the run that you're not seeing in gold, which makes it so difficult, is you didn't see that parabolic move. You didn't see that euphoria and that fear of missing out that's happening in gold this week. You just saw a nice trading signal. Now, try to highlight September, October of last year.
Yep, let me grab this. Boom.
You had a really orderly market. You had a really orderly market. So nice, look at that sideways resistance level that corresponded right with the 200-day. Nice signal, nice move up, and just the start of a nice trend that lasted for a long time. The problem we have on the gold chart right now is you don't have that nice orderly chart, that nice orderly technical signal. You see absolutely parabolic fear of missing out, move upward. These are very difficult charts with precision to say this is exactly what you should do, because you've left the realm. That palladium chart was beautiful, orderly, nice signal. You're seeing just pure momentum right now.
And actually, to add to that, this shooting star candle we're getting at the top with gold turning, or with the dollar turning over, like we were just saying, this is the absolute worst time to buy gold right now.
Well, if you've got a core holding, I still would do what we talked about yesterday. I would just buy the put option 2 years out and protect.
Oh, yes, exactly. Absolutely. Protect what you have right now. But like Mark was saying, there are people who bought this thing at 1440. This is not the time to buy gold and fear of missing out, because this chart wasn't as pretty as palladium was. But what we can see now in the chart right now is this potential, not reversal, but this potential pullback pattern that's forming.
I mean, go to Boeing at the start of the year, because these patterns are tricky and they cause the most headaches for traders. So let's say you're out there and you bought gold and you're like really excited, but you're like, you don't know what to do because it's tough. When you see these strong move ups, and we saw one in Boeing at the start of the year, Boeing was hot. We were, like it was on our option report a couple of times. There was huge sentiment behind Boeing. And you looked at that really, really strong move up, and it becomes really tough. What do you do? What do you do? And unfortunately, those planes went down and the loss of life, and that obviously altered the Boeing chart after that. But what you do on those really strong moves up, it is really important to think through, because guess what? It's not going to be the last time you're in a really profitable situation where you get in on a breakout, where you have strong move up, you're making money, and you're like, oh my gosh, this is great, because you get so hit with a dual set of emotion. You're fearful that this thing is going to run to the moon and you could make even more money. You're fearful that you're going to give back your profits, and you're worried about that. So you got fear playing on you from both sides. It is something that traders have to come up with a plan on. When you get these ridiculous moves in your favor, and guess what? It will happen more often than you think. It will happen more often than you think. What is your plan? How are you going to approach that? There's so many techniques. You can use trailing stops. You can, like if you're cash flowing it, like Tim talked yesterday on the halftime report, buy a long-term protective put and then cash flow. You can just sell and say, I'm going to take my profits, sell a put, and hopefully get in at a lower level. There's a lot of things you can do. It's important to come up with that plan before the parabolic move upwards, because that's when it's the hardest, because that's when your emotions are at their highest.
Markets are spinning out.
Pointed out this Boeing chart, because with the news kind of dying down behind it, this thing looks like it's not in a terrible setup right now. I mean, if this thing were to break 380, I'd be looking to buy Boeing again.
Don't get distracted. Don't chase the laser like a cat.
He is. Like he showed a little laser light to Cody, and he's like chasing it around the room right now.
Yeah.
You know what? I don't care. I'm liking this Boeing chart, but
that's pretty light. That's a pretty light.
It does have reversal characteristics, Cody. If it does break back above that resistance, I think there is some air to the upside here. I've been watching Boeing pretty close. We'll get down to individual stocks here in a minute. In fact, what I want to do today is a little bit of rapid fire here in the chat. And if you're watching our show right now, think of a company you'd like us to look at. We're going to look at it in the last 10 minutes. We're going to run through a bunch of different candidates. And think of a stock that you'd like the team here to analyze here in just a few minutes. Got to go back to the market, though. S&P 500 back on the ES. We are breaking down a little bit further. I'm reading some of the comments out of Fed Chairman Powell. And Powell used this word, Mark. He says the Fed is grappling with whether to cut interest rates or not. Do you think that's...
Is that the news that broke the market?
Yeah.
Might have been.
Yeah, he's giving testimony right now.
So happy when he speaks and the market moves. No sarcasm at all.
Here's the quote. You guys, I'll get instant reaction here. The question my colleagues and I are grappling with is whether these uncertainties will continue to weigh on the outlook and thus call for additional policy accommodation. Mark, make sense of that in English.
All right. What that says in English is that they don't want to cut interest rates.
No, they don't.
That is what I interpret that to say. They're grappling means they don't want to. They don't think there is a clear case to be made to cut interest rates.
Mhm.
And whenever you're making big decisions, you know, I mean, this is their job.
Mhm.
And so these are huge decisions, you know, and so this type of thing is not done haphazardly. And so when he uses the word grappling, the market is going to interpret that as meaning we're not sure. All you people counting on a surefire July rate cut, he just told all of those people, yeah, I don't know about that.
Yeah, that's exactly what I'm reading as well. He's saying we don't want to necessarily. Cody, how do you react to it?
So Noah and I actually talked about this last week whenever they gave the speech on the FOMC meeting, and he literally stated that they're not looking to cut in 2019, that they'll look at 2020.
Everything in the market right now, and this is important. Like, this is why you come to the halftime show. Everything in the market right now, as we're speaking, is being motivated because the market had baked in an interest rate cut, if not in July, soon thereafter. Everything that's happening in the last 30 minutes, dollars up, gold's down, stocks down.
Yep.
That is the 3-pack of price movement off Fed speak decision. If the Fed signals that they're not going to cut interest rates, that's going to impact gold. Oh, I hope. I would love to add some gold at some lower levels. Please, gold tank. I'm sorry if you own
This is also why you should, regardless of whether you're just a stock trader, an option trader, you like. It took me a while when I was a newer student to even know why I should care about the Fed or care about the dollar.
We spend so much time about the Fed, and guess what? We could have so many more viewers on all of our medians if we didn't talk about the Fed, but we don't care about that. We only care about people that actually want to learn how to do this.
Don't fight the Fed. You
and
have
the
to talk
Fed
Fed.
policy is nothing else matters. If you only do one thing, follow the Fed, because they are the most important market mover, both up and down, in gold, in the dollar, in your stocks. What Apple does is irrelevant compared to what the Fed does on Apple stock price. That sounds funny, but it's true.
Yeah, a little intraday sell-off.
When I got the opportunity last week to do the Forex report, I talked about this. I'm like, the reason that you should care is that we're all worried about these stock prices. What are those priced in? So when the value of the dollar is changing, it's changing the value of the stocks that you're trading. Not just fundamentally, like the exact dollar amount. If the dollar changes, then that $200 stock you just had might be $195 stock percentage-wise with the dollar. So you absolutely should know, because if the dollar were to go too bearish, then your nice large 401k isn't as big as it once was.
I might have to roll my put down.
Oh, you got it started, dude.
All right. Hal in front of the Congress said that, all right, this is recent, like today, he said that damage arises when policy bends to political interest. That is as hawkish a statement as I have heard out of the Fed all year.
Awesome. He is telling the politicians, including Trump, to back off.
Oh, okay. St. Louis Fed President Jim Bullard. All right, so a member of the Fed.
Bullard's an idiot.
Well, I know. And I know. Bullard is the Uber dub. We've had some very unkind to say. You know what he said? It seemed like a good times for an insurance rate cut. The situation doesn't call for 50 BPS cut.
Oh.
Obviously, we're going to need to monitor this over time. Right now, the market is telling you what it needs to tell you. We've got a red candle down a little bit here on the intraday. Sold off initially. We're rallying back. I think the close is going to be very important here today, guys, because as this testimony continues, you're going to have more comments, and the institutions who are watching this, just like you and I, Mark and Cody, they're trying to read the tea leaves here. They're trying to understand what implication does this have towards 25 basis points, 50 basis points, little uncertainty out of oh, no problem, Gino.
Here's the problem with gold. Real quick, let's get back to gold. You have a potential 1-2 whammy punch on gold right now. That if you're looking on how to protect gold profits, you have a 1-2 whammy punch on gold right now potential. Let's say you get positive trade resolution out of the G20, and you get the Fed sounding hawkish. Worst case scenario for gold in the short term. If you get those two events this week, watch gold sell off huge.
Oh, this makes me so happy.
Later on.
I'm seriously, no sarcasm anymore. I love a hawkish Fed. I love a hawkish Fed so much.
I would love that situation because I want to own more gold, and I can't buy at this level because it's not who I am. So
here's something else to think about, and I've got to wrap my head around it, and we're going to punt on this, but something to think about for you, the both of you later. If Powell really does not feel like he's getting political pressure, and he's actually being moved to lower interest rates over time because of economic indicators, is that a bad sign for what's actually happening in the economy and what they're seeing globally? Maybe they're seeing the risk in Europe and China as more real than what we're giving it right now, Mark. And I know we've given it, but a lot of the economy, a lot of the market is not. And maybe this trade war thing, they're looking at the implications and the fallout and saying, hey, listen, if the trade war continues, those are our bullets in our gun to lower interest rates. Testimony here today out of Powell. I don't think he's trying to spook the market. The market's not crashing or anything like that. Let's not get too worked up here. We're down less than percent.
Are you playing the short game or the long game? And I like a hawkish Fed because they're playing the long game. The short game of cutting rates because the market was down.
Listen, you're a Texan. Raise interest rates, buy gold. That's what you believe in your core, and buy guns. I mean, it is what it is, and smoke brisket. I get it, but that doesn't mean they're going to raise interest rates, kid.
They're not
raised, but just the fact that when the market was down, you had your politicians, your media coming out saying, hey, the market's down. Fed, why don't you go out there and fix this? And that's the political pressure that Powell is saying he's not looking at now, which I like because the Fed should be fiscally responsible. The person who has the most control over the largest currency in the world should not be fiscally irresponsible, and he should not bend every time a politician says, hey, the market's down. Can you fix it for me?
Mm-hmm.
No, let's let the market have some actual strength behind it. That's fundamental strength and not baked in existential crap that drives the market up.
Baked in existential crap. I like
Hey, listen, that baked in existential crap is the basis for every time the market sells off and I start buying, that baked in existential crap is the basis for that. That is the fundamental belief.
I'm going to have to tweet that out because, yeah, that just.
I also need a tweet of Mark like Goldfinger from the Austin Powers movie. Just his fascination with gold right now is over the top. It is everything.
And name one time I have been wrong in my analysis on gold going back. Like, seriously, like sometimes you have an absolute feel for an asset. You're in its head. You understand the price movement. You understand all the dynamics. Like, I get gold. Like, I mean,
yeah, you've been nailing it. There's no doubt. Moving on to other areas that you've been nailing as well. Crude oil, real quick. Gold.
All right, crude oil. Let's see. This thing's slowing in momentum. I actually did not. I thought it was either going to cut back pretty quickly or continue its run, but now it's just kind of fading.
You have that tension on Iran. That tension in the whole move in the last week in oil is the tension on Iran. It's not going away as long as that maintains some level there. You very well could have a floor put in short term based on the tension on Iran. If that ever resolves itself, you'll see a little bit of pullback, but it's not going away.
Mm-hmm.
That tension will resolve when they never mind. I'm not going there.
Punt on that, kid. Table it. I agree. I mean, crude oil here sitting in a doji. You've got inventories tomorrow. You've got the OPEC meetings next week, G20. You got Fed speak. I expect volatility out of oil. I don't think it's going to doji all week, Mark. I think we will get some action one way or the other. It's going to be interesting to watch this thing as it develops. Up just a hair here today while the market's down. That is notable. And I'll tell you, dollar up and oil is holding on here. Interesting.
Did you hear? Were you listening to what I just said? The dollar price movement on oil matters long term. Blah blah blah. It's all Iran right now.
Mm-hmm.
That's the only thing the oil market cares about right now.
Geopolitical risk. Interest rates are down again here today on the longer term notes. Not much there in the charts on the bond markets, though. Move on to Bitcoin real quick, Cody. I want to talk about Bitcoin.
Bitcoin is going parabolic again. It's actually making me more nervous. I applaud you for being in it back at 8,000 because I didn't want to touch this thing, but it's making me more and more nervous as it just keeps hammering through these levels and becoming a parabolic move again.
Well, if you take the opinions out of it, it was just an uptrend, right, Mark? I mean, I know that. It's just an uptrend,
Because once again, the start to this move started more orderly. You go back. My eyes are getting old. I can't lose. But in that range, when it started, that looked a lot like the palladium chart, right? Comes up to the 200, little sideways movement, nice little orderly move, and then things got crazy. But the start of all this was very orderly. Even before that, you had little breakouts of levels in the previous weeks. So the start to the move up was technical analysis 101. Form highs, breakout, leg up, form highs, breakout. Very, very orderly. And then it's just been going crazy the last week. But all of the previous move was very technical analysis, just orderly, nice signals. It was a beautiful technical chart for months and months. And now it's just going crazy. But
Tim, are you trailing stop or are you taking profit already?
No, I've been trailing it. To me, who knows where the top is when you go parabolic, and I have a small position. Here's the beauty of position sizing, guys. When you don't over leverage your trade, you don't have to overthink what to do with it. You just trade your plan. My entire plan was to target 10,000 as my first target and have an open-ended target if it runs, with a trail stop mechanic based on my rules. This is Step System 101, which, by the way, in the chat, just help me here, guys. If you're a pro member, you'll know what I'm talking about. Step System. Just type it in the chat, Step System. And we just actually put up module number 4 today on the Tackle Trading website, Mark. It's going to end up being about an 8 to 10 hour course with incredible work behind it, and we give it to our members for free. If you're a pro member, you get it as a part of your pro membership. It's just basic mechanics, but if you're not over leveraged, Mark, you don't get emotional about it.
You don't get, that's the thing. And what Tim just said, if you're a new trader out there, if you're new to managing your own investing, what Tim just said is maybe the most important thing you will hear in the last couple weeks and in the next couple months. Proper position sizing eliminates the emotion, which is at the core of almost every bad decision a trader makes.
Yeah.
What he just said, it needs to be said again because it is so important. If you are a new trader, and even if you're around and probably need a refresher course on the subject, having lower position sizes where you're not stressed about it allows proper decisions, allows you to do things in an orderly fashion, in a planned fashion. Most traders that have problems in the market, either is due to lack of education or due to its emotions taking over and having bad decisions made. And when you have smaller position sizes that don't reflect an amount of money that really matters to the grand scheme of your journey, don't be surprised when your decision making goes up dramatically.
Mm-hmm.
You go put 25% of your account on something, you're not going to sleep at night.
No, position sizing and over leveraging is probably the most common mistake. And we talk about it all the time in all of our shows. And that's the thing about tackle trading, quite frankly, guys, is you're getting veterans who've gone through what you guys are going through right now. It really is a tribe and a team and a community in this one real sense, Mark, is we're just dudes in our house that trade from home. And we're helping people because we're the ones with the 15 years experience, right? That have mentored and been through a lot of different market conditions.
Go to the gold chart. You need to.
Gold. Back on gold. I need a I need a gold meme.
Oh my God. Look at that.
Turn into the red.
You're having a real, now this could provide opportunity in days and weeks. I don't know. But once again, that Fed speak is hammering gold more than it is the equity markets. Equity markets got a little bit of a stab. Gold is getting a bigger hit because once again, you were in a euphoric. You were way above those daily moving averages. You had gone parabolic up, and hey, what can go up can come down pretty fast. Can come down pretty fast when there's a news event that takes place.
Yeah, that's exactly right. And here we are, dollar rallying, gold selling. Market did initially sell a little bit. We're only down 0.5%. So it's really kind of holding at this point. Obviously, we got a couple hours left in the market here. Fed testimony today driving the market intraday. Whenever the Fed, and that's why they say, do not fight the Fed. Be aware of everything that is happening from that perspective. Guys, as far as our skyline goes, that's what we're done with right now. One thing I want to do today.
I just got to say one more. Okay, this just came across a couple minutes ago on my news feed. This is from Powell. We're looking at the overall situation and wanting to see more. They removed the patience language, and I guess that's their new phrase. Instead of using patient, they're now saying we're looking at the overall situation and wanting to see more. Isn't that patience?
By the way, you know what's really
another way of saying it?
This goes back to the data that Cody was talking about that I've done a lot of studies on in the past as well. The actual Fed announcement doesn't create as much volatility as just random stuff that comes out of his mouth.
Oh my God.
Oh, that's so true.
I mean, we had less movement on the Fed announcement last week than we just had in the last 25 minutes or an hour or whatever it is. The market dropped about 15 points on the Fed announcement. It only moved like 10 points, Mark. So these planned events.
That's one of the things that gets me is that literally the things that come out of his face are able to move the markets themselves, trillions of dollars in movement because he uses one or two words incorrectly or very correctly if he's doing it purposefully.
Mm-hmm.
It's a lot of power.
There is a lot of power in that.
Oh my goodness. I would be the best trader in the world if I was the Fed chairman.
True.
I'll be like, all right, let's do some out of the money puts today.
Bankers
I'm way out of the money, and I'm going to spook the hell out of this market. Oh my God, that would be a billionaire.
Bankers create profit out of thin air through the fractional banking system. They don't need to trade for money. I mean, there's a reason why there's a bigger business in money than there is in markets. The bond market and the currency markets are bigger than the stock market by a long shot.
Is it illegal for the Fed chairman to trade?
Probably, I'm sure.
It's gotta be.
I bet he holds
seriously,
position.
go buy 100 puts or 1,000 puts at like 10 cents a piece and then be like, yeah, this entire market's going to collapse.
Because I could have doubled out of the money puts in like a matter of an hour had I been Fed chairman. I could double my account every time I open my mouth with out of the money puts.
Correct. I've got to wrestle this whole thing in here though, because I do want to do some rapid fire. First thing we're going to rapid fire though here, Cody. Yeah, today after the market, we got a couple of earnings, Micron and FedEx. These are two very popular companies we track. Be aware of them if you are trading earnings. If you're a volatility trader, there might be some opportunity here on Micron, little inverted butterfly, something like that. I do like a couple of different things. Tomorrow, BlackBerry paychecks, so on and so forth. There's a couple of the companies, KB Home later in the week, Pier 1, Rite Aid, which is interesting. We've talked about that stock more this year than I have in probably a decade, but not a lot of big ones. FedEx and Micron are the big ones. And one thing I want to do today, it's a Delta Tuesday. And Cody, maybe if it's popular, we'll make it a part of Delta Tuesday, is Little Market Skyline Rapid Fire Edition. Guys, if you've got a stock you want us to look at, put it in the chat. We're going to look at them real quick, and we will go around the room less than 15 seconds analysis on any one company. Okay.
I love me some rapid fire.
I love rapid fire. Just punch your ticker symbols in the chat. We had a few from earlier.
Oh, they're too early. They jumped the gun. You get penalized for jumping the gun.
You don't get the early ones in. Freeport McMoran Copper Gold. I'll give it to Mark. FCX. Give me a read on the chart.
This is all about copper. I like the floor because it's a long-term floor. Until copper stabilizes, I don't have any interest.
Okay, let's go to Tesla. I'll take this one. Look at
Oh,
Tesla.
one. I don't have to look at the chart. I can tell you what I think about Tesla.
I've been waiting for bearish confirmation on this. If you break below the little pivot points in the intraday, you've got intraday momentum rolling over. You've got a longer term downtrend. I'm personally going to be looking at bearish opportunities yet. Little red candle today, in my opinion, is not confirmed yet. Moving on to lift here.
That's a pinch waiting to break.
It's a pinch waiting to break.
The list had the inverted head and shoulders where it did break last week. Now it's got a high base kind of forming just outside that break zone. So I would look for another break just past where it's making this base, and then you can play to the upside.
Got it. Lane Wilding, UAL, Airlines Market. You got this one, UAL.
That's an ugly chart. That's sideways, easy consolidation to identify. Range bound. So unless you have range bound strategies, you wait for a break of support or break of resistance.
Okay. Snapchat SNAP. I'll take this one. Bullish. Incredibly bullish. I mean, look at the chart. Social media companies, there's certain ones that have performed really well. Twitter's actually had a pretty good year, but Snapchat has had a much, much better year. Coming back in above $10 a share. Obviously, it's been bullish up here for a while. Now 14. I like it. I don't know if it's a new entry here today, but in general, that's a really, really strong company, Ime. Beyond Meat, Majin, BYND. Cody, you get this one.
Majin, one day.
All of the new IPO stocks, even though we tell our students we don't trade IPOs, we had Lyft, we had Snap, we have Beyond Meat.
Majin is one of our trading lounge regulars, has been for the longest time. And Majin, one day I want you, and this will make me so happy if you just say, analyze Coca-Cola, because Majin loves high-flying stock. She likes,
and that's what I'm getting at, sarcastically, but also very seriously. Why are these all IPOs, new IPOs, the ones that are in the news, the ones that are coming up?
Because that's human nature.
Yeah. First of all,
there's Roku in the chat coming up too.
We like Momo.
You listen.
All right, let me look at Beyond Meat. So Beyond Meat is.
You're forgetting the rapid fire, by the way. This is being slow cooked right now.
I know, that's why I wanted to jump back to it. So rapid fire, Beyond Meat, it popped up. It's kind of looking to find a base of some sort. It's got its 20-day moving average, just still brand new, forming, coming down to that. If we can get a close to the upside, then I can see you playing this, but I don't like it. There's not enough data for me to really go off of.
Since we're slow cooking this one, I'll give you secondary analysis as well. That huge red candle on high volume brings a red flag into the retracement. So even if you do see the bullishness, be aware of some of the risks that are built into that chart, as well as just the volatility. Let's look at a couple more here. Toll Brothers, TOL, Mark, home builders, dividend payers.
Home builders getting a hit. I would love home builders are going to take a hit on negative news. Everything we talked about, Toll. Everything we talked about the Fed, wait for volatility to die out. There is strong support levels over the course of the year on every home builder. Identify those. On Toll, it's at about 34. See if you get a nice doji candle down there. Could provide a possible entry. I'm actually looking to do a boomerang trade on home builders.
AMD, I will take this one myself. It was the stock of the week last week. I loved the bullish retracement. It is holding as of now. It is holding the old resistance, new support. And in that moving average pinch, it's actually come into some complexity here, Mark, because when it didn't confirm and just run off of that moving average bounce, now you're below the 9, but you're above the 20, and you've got some mixed action. I know there's risk in there, guys, but there's also opportunity. You're in a bull zone. Watch for a move one way or the other from here on AMD, stating the obvious on that one. Couple more, then we're done. Garmin from Caleb, Cody, GRMN. This is a tackle 25 candidate, one that is optimized for covered calls. We like the dividends. We like the cash flow. Give me a read, Cody.
So definitely like this thing for covered calls, especially if you got it back, the beginning of the year when the list first came out. But as of right now, it's fading sideways. I don't really see anything that's going to make me want to trade this one way or the other. So I think a covered call strategy is probably the best one for this.
hmm and Marie does have a good point to rebuke you, Cody. I let it go earlier.
I
She said
saw Marie's.
Lyft was on the option report, and it is not
And it was
necessarily.
debated by the coaches whether or not it should be on there. The
It didn't
reason it made it
IPO
on
last week. It's
The
gone through
reason
an
it made
earnings
it on
cycle. We're 3 months in. It's fine. Moving on. Last one. Two more. One for each of us. Give me GE, and I'm going to analyze this one, and then we're going to end
Whatever.
with Mark.
You're not allowed to analyze GE. You're just going to say it's a crappy company, no matter
It
what.
is a crappy company. They've got a negative PE ratio. They've not participated in the market run. I have not lost my rant on this one. I will rant about it. I've given it a couple of months to kind of.
I'm selling a put on it right now.
We'll see if they can recover their business model. I still see a $5 price tag at some point in GE's future. That's personal opinion.
I could make an argument for reversal here.
Yeah, you can make a technical argument that it is moving higher and you've got clear upside.
Right now is that it's no longer its downtrend is over.
My opinion on GE is not about its technicals. It's about its fundamentals. Okay, period. That's the way I approach that company. Last one, Mark. We looked at it earlier, but the other one, FedEx, give me UPS. Both of them. With FedEx earnings tonight, Mark, would you be approaching UPS with caution?
You have to know when other companies that are similar, we call this industries in the world of investing, when they have earnings, because they can move stocks that don't have earnings. Mm-hmm. As FedEx moves, so will UPS. So that could provide nice opportunity. But it is, we saw this with cigarette companies, one of the most graphic examples ever last year. Philip Morris had earnings and Altria took a dive. And be aware when stocks you're trading, when some of the major counterparts have earnings. So there could be some volatility on UPS tomorrow.
Yeah. And last thought here, guys, thanks for being here on our halftime report. Tonight we have our coaches show. And during our coaches show, we're going to be diving into step system module number 3 with some live case studies and examples. Today we also released our step system module 4. It's going to end up, when we get all of the content out there, we're releasing it week by week by week, about an 8 to 10 hour course, Mark, to help people learn how to do delta trading as a part of our pro membership. If you've ever been wanting to join our pro membership, it's the perfect time to do it. There's no doubt about it. We're adding more value and we're putting, a lot of that right into you guys and helping you guys out. I did see Cody's, thought of the day there, Cody. Something about one of our great generals took office today or something like that.
No, this is when he took over the armies in Europe for World War II.
I see.
So, and that's basically when they finally made the smart decision.
Eisenhower?
Yeah, and they let Eisenhower take over, and, look how it ended.
Do you guys ever get tired of like World War II documentaries or
Never.
history?
Never.
Me either.
No.
I love that stuff.
Oh, my God. World War II is one. I could study it over and over and over. As a matter of fact, I just finished the show, Man in the High Castle, or the alternate history.
World War II is great because it is there have been huge geopolitical events on massive scales like World War II a few times in the world's history. None that's been documented like that. So all of the different players, how it played out, the different personalities, it's fascinating.
So complex, yeah.
I could watch World War II documentaries over and over, and plus just the dark side of humanity, how that played out, and the good side of humanity. And there's just, it was humanity at its best and worst in so many ways. And yeah, and there was I'm sorry, in an age of relativism where everyone's like, well, there's no, it was good versus evil. It
really was. It really was.
Yeah, it was. And that's why I love the history, stuff as well, because then you get to study when good actually did take on evil and made some very, very important choices. People that forget our history, they make mistakes, I think, and I think it's very important as men, as women, as citizens to celebrate that history and study it and really try to understand it.
And in the context, I would like anybody that is a veteran, Tim, your daughter joined the military recently, and I'm so proud of her. And all those, I get to sit here and look at charts and debate nuances and put levels and deltas, in large part because of the sacrifice men and women have made throughout the course of our country. And it's just, and I just, since it's coming up in context, I would like to give that thank out to all of you out there that have served, because there are people that would like to do my family harm. And you that serve in the military currently are out there protecting me and my family from those people. And we should thank you every day, because we take it for granted too often.
We do.
And thank you for that in your service today, because we get to sit here and debate things that don't really matter. I mean, they matter because it's our financial future, but we get to spend a lot of time doing nonsense because of the sacrifice and the effort you put forth.
That's right. That is exactly right. Well said. And we live in a great country for all of those different reasons. Participate in the political process, because those freedoms and those things you're talking about, they were fought for a reason. And there will be a Democratic presidential debate coming up here, Cody. I'm sure even as my right-wing friend, you are going to be watching with interest, I'm guessing.
Absolutely. I'm a political junkie. I love watching that stuff. Yeah, I'll absolutely watch them make fools of themselves and argue and fought at each other. They're all gonna basically say, "I'm
going to give you more stuff." No, I'm going to give you more
crazy
stuff.
left idea. They're just gonna run as fast as they can to the left and just, yeah. Anyways, that's my thought, and I will laugh.
I think we should have
More important.
12-hour work weeks.
More
And
important than listening to you guys rant about the left. I will say this, one news announcement here this week. We have our Women in Trading Mastermind group. If you are a lady and you want to join the Women in Trading.
What if I identify as a lady?
What if you what? If you're married to a lady?
No, what if I identify? It was another SWAT at the left being crazy.
Yeah, no, Cody, you're not welcome. All right. Maybe if Emily decides to let you dress up in drag and then come and join them, that's her call, not my call. I'm not
think
touching.
Cody just got banned from all Women in Trading that ever occurred.
I think he
I
might have.
apologize to everyone on behalf of Cody. Cody's views do not reflect Tackle Trading.
Thank you, Mark, for the disclaimer.
Yeah, anyway. All right, guys. Thanks for being here with us. TackleTrading.com. We will be back tomorrow with our halftime report. See ya.
Tim, you are on the.
We are still.